Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In today's video, we are looking at why free cash flow matters. Okay, we talk about this a lot, especially when we talk about dividend companies. Generally, any stock, when we always talk about free cash flow and the free cash flow yield and the free cash flow margins and all of this stuff. So we just want to make sure that we really understand what it means. So this is going to be a very short video. So if you have not subscribed to the channel already, please do like the video. And also, if you have not joined us on the Discord and the Patreon account, please do so because it really helps the channel. Right, so why does free cash flow matter? Okay, so that's the first thing we're going to talk about. First of all, what is it and why does it matter to companies? And that's it. I'm going to make this video very short, so at least I've got plans for this type of videos. I've done the plan a long time ago, but I haven't had the opportunity to record them. So I'm going to record them in the next few weeks, inshallah, just to kind of share some of the metrics that we're looking for. So free cash flow is an important financial metric that measures the amount of cash a company generates after accounting for capital expenditures. So after basically the things like anything investment, any plants and equipment, once they've taken care of that side of things, okay, and that's that's the cash that's left. Okay, and this cash can be used for a variety of purposes, such as paying dividends to shareholders, repurchasing stocks of the company or the shares, and investing in growth opportunities, paying off debt, and so on. So I'm going to go over why this is basically one of the most important part of looking in a company's financials. So why does free cash flow matter? Okay, and what is free cash flow in the first place? Like I said at the beginning, free cash flow is basically the money that company has left over after they paid off all their financial obligations. So they've basically paid all their expenditures. Okay, they paid off their rent, they paid off the workers, everything else. So free cash flow, the formula is free cash flow is equal to free cash flow, the cash from operation activities, meaning the money the company makes, okay, from selling goods and services, minus the capital expenditure. After that, what's left, the money that's left becomes a free cash flow. And this is the money, like I said at the beginning, that companies use to buy back their own shares. They pay you dividends. They basically pay off any debt. They use that to invest in the growth of the business and so on. Okay. And it is one of the most important thing and overlooked thing when you look at the 10Ks and so on. A lot of investors don't really pay too much attention to this. Because right now we're in a crazy situation where interest rates are very, very high. And what is happening is a lot of companies do not have cash. So what are they doing? They go to the bank and get a loan. That loan they have to pay off whatever the interest rates are, like 4%, 5%, whatever it is these days, right? But if the company has a free cash after they've actually paid off all the expenditures, whatever, they still have money left over from whatever. And there is an opportunity to acquire another business or to pay off the debt or something else, right? Then the company can use that money, right? So next thing we're going to look at is why is free cash flow important, okay? So provide a measure of a company's ability to generate cash. So as investors, it helps us to understand, okay, if the company has the ability to generate cash. That's number one, because you don't want to invest in a company, right? So free cash flow provides basically an insight into the company's ability to generate cash, which is crucial for any long-term survival and the success of that business. That's the first thing. The second thing is helps assess the company's financial health. Free cash is key indicator of a company's financial health, as it measures the amount of cash available to meet current and future financial obligations. Again, really important. Helps evaluate a company's investment potential. Okay, so investors often use free cash as the tool to evaluate a company's investment potential. A company with strong free cash might be more attractive to investors than a company with weak free cash flow. That meaning, if I know this company has got like $20 billion in the bank, okay, then I know this company will potentially buy other companies and reinvest in the business, pay off the dividends, increase that dividends. Okay, so it helps me to evaluate and see how secure this company is or this business is in general. Because remember, in the end of the day, it is a business, right? And then it gets to strategic decision making as well. Okay, so free cash flow can also be used to guide strategic decision making, such as determining how much cash to allocate to dividends, share buybacks, invest in new projects, and so on. So it helps the company itself as well. And there are a couple of things that you can look for. Free cash flow margin, okay, which is basically roughly you're looking for free cash flow margin of 10% to 15%, which is quite good. Some companies will have a little bit more than that. Some companies will be lower. So it helps to look at the percentage. Okay, that percentage helps us to, because it's the free cash flow margin is defined as a free cash flow as a percentage of revenue. So it is quite good to actually have. Some websites will list this, some don't, but you can easily calculate it by the free cash flow margin will be the operating cash flow minus capital expenditure divided by the revenue. That will give you free cash flow margin. So it's easy, and you can find this information. I'll show you where you can find all three of this information if you want to calculate the free cash flow margin for a company. And the company that I'm using here is Automatic Data Processing. And if I look at the income statement, I can see their revenue. Okay, so if you go to here, you can see the latest revenue and where it came from. And once you have that information, the next one is to look at the cash flow here. And then if you scroll down, you'll see free cash flow here, and then you see operating cash flow, and then you see the capital expenditure. Okay, so you know exactly. So if you take away these two from each other and divide it by the total revenue, okay, then you will get basically a free cash flow yield, free cash flow margin, if you like. So if you're looking for the margin and the percentage, right? So basically just do that. Okay, so is the cash from operating cash flow minus the capital expenditure divided by the revenue will give you the margin that you're after. So it's easy to find and easy to calculate. And like I said at the beginning, this is one of the most important thing that we look for when we are assessing a company's ability to not only pay us dividends, but to grow the business. And companies that don't have a free cash flow. So this company has got $3 billion, right? That $3 billion is actually money sitting in the bank that they could use for a lot of things, like we said at the beginning. And that's what you want to see. You don't want companies that have a negative free cash flow, because what is going to happen is they're going to end up getting more debt. Then they have to finance that debt, and then obviously the debt level increases, and then the interest rates are going up and up and up and on in the next whatever years, especially in this kind of circumstances that we're in at the moment. So I'm going to stop the video there, but that's why I love free cash flow. I basically make sure the companies that I'm investing in have excellent free cash flow. They can pay those dividends. They can buy back their own shares. They can grow the business. Okay, so when you're investing in a company, look for excellent free cash flow margins. Okay, look for anything between 10 to 15. If you can get companies that are more than that, absolutely brilliant. Go for it. There's a website called Micro Trends, and there's a lot of information in that website you can find. Just Google Micro Trends and you will find any company with their free cash flow, all that matrix that you're looking for. I'm going to stop the video there. Have a wonderful day. Assalamu Alaikum.